Hello everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly market updates for the week ending September 2nd, 2022. We hope everybody had a great Labor Day. The U.S. stocks and bond markets were closed on Monday in observance of Labor Day, so we still had some down activity for the week. The stocks were down across the major indices last week. The benchmark broad U.S. index, the S&P 500, was down 3.23, the Russell 2000 dropped 4.7, and the NASDAQ was down 4.18. Now, the U.S. trading volume was extremely light, which makes for increased volatility. Overseas, the developed market, which is the EFA, gave up 3%, while the emerging market was down 3.41. Within the U.S., the best performing sectors were utilities and healthcare, while the poorest performing sectors were technology and material. And by style, the value outperformed growth. I think we're seeing a lot of that this year. Fixed income, interest rates rose and bond values fell last week, with the 10-year benchmark up 16 basis points to 3.2%. Noteworthy was the narrowing of the spread of the yield curve, which at the 2-year, between the 10 and the 2-year for 33 basis points it was, and now it's 20 basis points, although it's still inverted. So we talk about the downside of the market this year. We look at the value. We talk about value and growth. The S&P, the G50 portfolio, which is our 50 blue chip value stock portfolio, is down just over 9% this year. So when you're looking at that, like, oh my goodness, it's down 10, 15, 20, 30%. We're down less than 10 in that because it's more value stocks with dividends. So just kind of an overview of what we got going on. Let's talk about commodities. Russian supplies of natural gas to Europe, formerly 40% of demand, were shut down indefinitely in retaliation for sanctions post-invasion of Ukraine. Now, this caused prices to soar 30% on Monday, and the prospects for limited supplies and surging costs are causing the euro to fall versus the U.S. dollar as the outlook deteriorates for industrial production, transportation, and winter heating needs in Europe. So they're going to be paying a lot and having a lot of issues over there, which, of course, it could come over here. So economic data, consumer sentiment in the U.S. rose for the second consecutive month in August, up 6.7% month over month to 58.2, recovering from an all-time low in June when Americans' inflation expectations in the near term fell. Now, the median expected year-ahead inflation rate is 4.8%, down from 5.2 last month, and its lowest reading in 8 months. We're starting to see inflation dissipate a little bit, but it's going to come down, but it's still going to be up there a little bit for a while. So we're starting to see it pull back a little bit. U.S. manufacturing activity growth held up in August after slowing the previous 2 months thanks to higher new orders for employment, but it remains at the lowest rate in more than 2 years due to ongoing supply constraints and slowing global growth. The index stood at 52.8 in August, unchanged from July, and note that any reading above 50 still indicates growth. So, and non-farm growth jobs of 315,000 for the month in August was within the range of expectations, although down sharply from 526,000 that were reported in July. Notably, the unemployment rate edged up to 3.7% from the month before of 3.5% due to the over 500,000 return to the workforce. Also, the average worked hours per week declined an average of and wages grew by 5.2% for the second consecutive month, indicating lessening pressure for additional labor. Let's talk about company news. Stocks of semiconductor chip makers traded lower after the U.S. government imposed new licensing requirements on shipments of some of more advanced chips to China in an effort to keep them from obtaining American technology and advancing its military. We'll see. Gradient Investments holding A&D Corp., Broadcom, Lam Research, NVIDIA, and Taiwan Semiconductor Manufacturing Company declined between 3.96 and 16.07 on the news, which you would think that would be going up with all the demand for semiconductors. So, and that is it for this week. So we thank you so much for being part of our ARA family. Feel free to contact us, of course, at 855-756-5700. Visit our website at aradvisorsinc.com. Don't forget to visit our Facebook and YouTube pages. Scan the QR code if you're not already getting our newsletter and share it with somebody. Also, of course, we're coming to the fourth quarter now, so we know we want to have those conversations of Roth conversions, of looking at making sure that we're doing what we need to do and optimizing the taxes that we can right now. So we're reaching out with you. Make sure you reach out with us, and let's get something on the books so we can sit down and go over our plan for the end of the year. Okay, take care, God bless you, we'll see you next week.